Hello traders and welcome to another video review. Today is Tuesday, February 6, 2024. Let's take a look at the economic calendar today. It's going to be busy. So, overnight, data from basically a little bit from the Japan, nothing special here. All of the household spending data were completely different than expected. So they basically don't spend too much money in Japan these days. BRC retail sales monitor from the UK, better than expected, 1.4 versus the 1.2. Nevertheless, it's still worse than last reading of 1.9. Then the key event of the overnight trading session, Asian session, was the ABA interest rate decision. And according to the expectations, it should be left at 4.35%, and this is exactly what's happened. So no surprise here. Monetary policy statement and RBA rate statement were published as well. Then early London session, we got German factory orders, high improvement, or 8.9% versus the forecast of minus 0.1 and the previous 0%. So very nice data from German factory orders. Now we are going to see soon the construction PMI data from the UK, 10:30, and 30 minutes later retail sales and unemployment rate data from the Eurozone. During the New York session, we got building permits and IV PMI data from Canada. Those data are scheduled for use at 2:30 and 4 o'clock, together with the global daily trade price index from New Zealand. And at the 6 o'clock, we got the first speech of the day. FOMC member Mester would give a speech. At the same time, at 6 o'clock, we got a short-term energy outlook from EIA. This is the key event of today. So please pay attention. And 1 hour later, we got speech from Bank of Canada Governor McClellan. And then we got the free and note auction from the USA, and API weekly crude oil stock data are scheduled for at least 30 minutes past 10. Then we got bunch of data from the New Zealand and Australia, employment change, unemployment rate, and AIG manufacturing index. So busy day in data. There might be plenty of opportunities and trading setup today. Markets might get violate. Markets might get a little bit more on the move today, as they say. So please stay focused, stay vigilant during the Tuesday trading. Because of the interest rate decision, we are going to take a look at the Australian dollar. But first, let's take a look at the, let's start with the Australian dollar whatsoever. Let's start with the Australian dollar. For our chart of the Australian dollar, doesn't actually look good for bulls. We got the new local low made at the level of 6,471 pips. If we zoom out, we can see that this level is way below this technical, that used to be support, now it's going to be resistance. And as you can see, it was a valid level because it was tested 2 times already. So let's make this level a little bit clear for all of the traders right now, and it's red, so it's the technical resistance. The resistance located at 6,528. As you can see, plenty of the times this level has been tested. Finally, we have a breakout, and now currently the market is going to test this level again. So any breakout above might be a little bit bullish. Nevertheless, it doesn't change the overall outlook of the steady downward pressure by the bears and the slow but sufficient downtrend development. Let me just place one more line I just noticed, because it looks like we might have very nice trend line here. There you go. This trend line, of course, will be orange as usual. So it won't help much if the bulls will break above the technical resistance. They need to break above the moving average 50 periods, and then above the 100 periods moving average and the technical resistance. So plenty of the pressure to the bulls. Now, where is the next technical support? Not that far away, but it's not that strong whatsoever. 6,445. This is the next technical support, and there is one more technical support which is located, of course, at the lows of the November 2023, 6,341. So it looks like the road towards those two levels are basically opened, and if there is no improvement in the Australian economy, then we cannot actually expect any sort of the bullish pressure soon. So that's the Australian dollar. Let's take a look at the New Zealand dollar as well, because those two pairs are very often correlated. So as you can see, almost the same picture. However, the bullish movement to the upside, this bullish pressure in the end of the 2023 and early 2024 was greater than in the case of the Australian dollar. Nevertheless, we just broke below this technical support. So let me just clear it up for you. So this technical support now is violated, was here. So let me just leave it on red, because it looks like the bearish pressure might be very, very strong on this market soon. And the other thing I would like to point out is a potential head and shoulders pattern. So the head and shoulders pattern, let me just take my tool. There you go. From the lows of here, right? So we got the left shoulder, right? We got the head. We got the right shoulder, a little bit higher, and now we are breaking. There you go. We are breaking lower. So the neckline is exactly where it's supposed to be, and now there is a fight of the neckline. If there is any breakout to the downside, you can see that there is plenty of the pips to be covered. 6,360, basically 300 pips to the downside is the projected target of the head and shoulder pattern on the New Zealand dollar versus the US dollar. Of course, let me just place some technical supports. There's one here, 5,996. Okay, so that's even below the 6,000 already. Then another one is 5,935, and then there is one at 5,889, and the last, the most important one, the crucial one, is 5,768 pips. This is the low of the October last year. So this is a technical picture of the New Zealand dollar, right? So I promised you euro dollar, so let's go back to the euro dollar to see what is going on there. And as you can see, we are moving lower as the bearish pressure increases. So there is a breakout below this internal trend line. Let me just grab it. There you go. So this is the internal trend line. Let me just move it lower, because it looks like the market will be, there you go, market will be using it, especially bears might be using it as the technical resistance right now. So let me just change the color of this line. So we know that the level of 1.0781 and 1.0769 are now the intraday technical resistances, and the market is trading just below the local internal inside blue terminal, right? So some sort of the hammer was made here. So let me just place my hammer label below. Hit exactly the key technical support, 1.0724, slight bounce, but this is definitely not enough. We almost hit the extremely oversold market conditions, but the bearish pressure is very strong. The momentum is negative. The momentum is weak. Despite the fact that we almost hit the extremely oversold conditions, it doesn't actually look good whatsoever for bulls. It looks like the pullback will be done, and then we will resume the downtrend, basically, right? Let me just take a look. Where is the next target? Quite close. The next target for the bears is located at 1.0696, which is not that far away, and that level is, of course, another technical support, horizontal technical support. Is it there you go, this is that one. That's not the consolidation low support is 1.0657, right? So that's even below the current technical support. It doesn't actually looks like there is some bullish pressure on the market right now. It doesn't actually look like the market wants to do something about it, especially the bulls. So I'm moving my blue arrows lower because they indicate the key levels. Right now this blue one is moving towards 1.0901. So that's the key technical resistances. Without a breakout above, there is no uptrend resumption or even deeper pullback on the euro dollar, of course. So that's everything from me for today. Thank you very much for watching this analysis. I hope we will meet again tomorrow. Take care and bye bye.